All right, let's dive in. Today, we're cracking open a pretty exclusive playbook. This is the guide used to funnel billions of dollars into some of the most ambitious projects you can imagine. We're talking about the new rules for investing in the Gulf region, and it all kicks off with one massive question.
I mean, think about that for a second. It's a huge question, right? This isn't about picking a few stocks or buying some bonds. We are talking about taking a direct stake in building new economies, literally creating new skylines from the sand up. That's the scale we're operating on here.
For the longest time, the ultra-wealthy played a pretty conservative game with their money. But in the Gulf Cooperation Council, the GCC, something radical is happening. The old rulebook, it's been completely tossed out, and we've managed to get a peek inside their new one.
So what is this huge shift all about? Well, it's a move from just, preserving wealth to actively using that capital as a tool for building nations. Money is no longer sitting on the sidelines. It's right there on the front lines, literally constructing the future.
This quote from Dr. Pooyan Ghamari, who's a major voice in this world, just nails it. He points out that this isn't just about pouring concrete. It's about engineering these modern, tech-driven wealth engines that can operate anywhere in the world.
And who are the key players making this happen? Family offices. Now, you got to forget that old image of some stuffy manager just looking after a stock portfolio. Today, these are incredibly sophisticated, hands-on investment firms. They're not just bringing cash to the table, they're bringing expertise, their networks, and their vision, working right alongside governments.
So why the big rush? What's driving all this? This number. This is the answer. 65%. That's the target for the non-oil sector's contribution to GDP in places like Saudi Arabia by 2030. It's a massive national mission to build an economy that will thrive long after the oil runs out, and it's fueling an investment boom like we've never seen before.
Okay, so let's say you've got billions ready to go. How do you even find these deals? Because they are not listed on the stock market. You have to engineer your access. It's a real art form, just getting into the rooms where these deals are actually put together.
So how do they pull it off? It's a really smart, multi-pronged strategy. First, they tap into private channels connected to what are called gigaprojects. These are developments that will alter the entire nation, like NEOM in Saudi Arabia. They build really deep relationships with the advisors to sovereign wealth funds, and, this is crucial, they make sure their investments perfectly align with national goals, like Saudi's Vision 2030. That alignment is the key that gets them priority access to these exclusive club deals.
And here's what one of those club deals actually looks like on paper. You can see the sovereign funds and the government partners hold the lion's share, right? But the family offices get to co-invest, carving out a very, very significant 15 to 25% slice of a huge national asset. It's an incredibly powerful partnership.
But look, getting into the room, that's just the start. How do you know if a billion-dollar project is the real deal or just hype? This takes a level of due diligence that's almost like financial forensics. You have to separate the exciting vision from the hard operational reality.
Dr. Ghamari's framework is basically a three-step stress test. First, you look at the big picture. Does the deal actually hold up against major economic risks like inflation? Second, you get granular. You audit everything, from the supply chains all the way down to the code in the smart contracts. And third, and this is so important today, you measure the brand resonance. What's the potential for a positive social impact?
Why is that brand impact so critical? Because it translates into real, measurable value. The data shows that when one of these mega deals is also tied to a good cause, like sustainability or education, it can boost the family office's brand sentiment by a massive 18 to 22%.
And you can see it plain as day right here. A standard project? Yeah, it gives you a solid bump in reputation. But a cause-related deal? That's a whole different league. This just proves that doing good is literally good for business. It creates this powerful halo effect around the entire investment. Now, the thing that ties all of this together, the real unfair advantage these investors have, is technology. They're using a brand new digital toolkit that is completely changing the game when it comes to the speed, the security, and the very structure of these huge deals.
So the key technology here is something called tokenization. Don't worry, it sounds more complicated than it is. Essentially, you take a real-world asset, think a skyscraper or a port, and you convert the ownership rights into digital tokens on a blockchain. And just like that, you've made a massive illiquid asset something that can be easily traded, divided up, and accessed securely by investors all over the globe.
And the difference this makes? It's just staggering. I mean, look at this. A process that used to take months through old-school banking now takes a matter of weeks. The risk of another party backing out is replaced by the mathematical certainty of a smart contract.
And maybe the biggest deal of all, your capital moves 40% faster. That speed is an absolute game changer.
So, the big question is, does this whole playbook actually work out there in the real world? Well, let's take a look at a case study where all these pieces, the strategic access, the forensic vetting, and the high-tech toolkit, came together perfectly.
Check this out. A $300 million logistics hub in the UAE. A family office used a platform called ALAND to tokenize the whole thing, which made it super easy to bring in partners from around the world. They built in a social impact angle with a workforce development program, and bam, that directly led to a 20% jump in partner loyalty. The final result? An ROI of over 24% in the first year. That is the playbook in action, delivering incredible results.
So, what's the big takeaway from all this? It's that we're in a whole new era of investing. The most successful mega deals aren't just about clever financial tricks anymore. They're this powerful mix of cutting-edge tech, real social impact, and, of course, incredible returns. Those three things are now completely inseparable.
And that just leaves us with this one last kind of mind-bending question to think about. When these technologies make massive physical assets, like a port or a power plant, as easy to buy and sell as a share of Apple stock, what does that do to our whole idea of ownership? It's a revolution that is really just getting started.